Hello, everyone, and welcome to Ancient Roman Trading Secrets with General Romulus. That's me, Romulus. This show is brought to you by Backpack Trader. Our goal is to help you become the best version of the backpack trader you can possibly become. I know many of you watching this are still stuck in the Robinhood, Wall Street bets, get me rich overnight type of scheming stock trading world. And I know that many of you are still putting incredibly misled hopes and dreams in the crypto space. We never heard enough of this, did we? A year and a half ago, last November, when Bitcoin was tearing up to new all-time highs. But when it hits a new 52-week low, crickets. Crickets. There it is. Just a couple days ago, Bitcoin hit a new 52-week low. Now, this is on a closing basis, not intraday. I acknowledge that, sure. Lowest point still over the corrective period is over here in the middle of June. That happened to be coinciding with the bottom, relatively speaking, of the stock market. However, if those who believe that Bitcoin and crypto world has leading indicative abilities still, what do you think that means for the S&P 500 and the rest of the stock market? Huh? You got that in your Wall Street bet post? I didn't think so. Now, for those who do a lot of driving out there, you will get some relief. We talked about this yesterday. Gas prices, you see breaking down, maintaining this downtrend, and then breaking down from this little consolidative stretch right here into a new multi-month low. Up, yes, today, but yesterday we're talking about a hit of almost 6% downside. Pretty big drawdown there on the oil market that will relieve pump prices around the country. And I say the country, not so much around the rest of the world. And this is kind of the paradox that the global financial situation finds itself in today. So let's tear into that, shall we? Okay, ready? Here we go. This is the dollar against the euro. As this line goes lower, it means the euro is decreasing in value against the American dollar. Oil, which we just looked at, is priced in US dollars. It is not priced in any other currency on the international markets. And therefore, let's see if we follow this along. Whoops, that's not it. We'll use FXE, which is a nice proxy for the euro. FXE is an ETF that you can buy and sell and get you involved without being involved in the currency markets. You can actually trade currencies. But FXE, or the euro, has been declining against the value of the dollar for several months. The downtrend is still obviously in place. Oil is priced in dollars. So as the euro drops in value against the dollar, that means that people who want to buy oil in other markets, such as Western Europe, have to buy dollars. That costs them more money. So the fact that oil is going down is not really impacting them on the positive side of the inflation ledger as much as it is for American citizens and American-based companies. Does that make sense to everybody, or should we do that again really quick? Okay, let's do it again. Oil is going down. We see it. It was at $120, $130 a barrel earlier this year, in the middle of the year, and now it's trading in the low 80s. The value of the dollar has been going up against every major trading currency partner for the last several months. Oil is priced in dollars around the international trading community. So if a European customer wants to buy oil, they have to get involved in the US dollar market. The value of the euro has been declining against the dollar. It costs more euros yesterday to buy a dollar than it did several months ago, than it did a year ago. They need those dollars in order to acquire their oil. As oil prices drop, so does the euro. By the way, that's not a direct connection. That's just been happening lately. As oil prices drop, the euro's been going down in value. So they're not getting as much of a benefit for the lower oil prices. They are slightly, because as a percentage and a pound for pound, hey, how about that comparison, oil prices are still dropping a little more for them, but it's not as much of an inflation benefit as it is for US-based paying customer or company. Natural gas prices have also dropped over the last couple of weeks to still probably not a reasonable or manageable level for Western European customers. They're facing a harsher winter in terms of supplies for heating their homes, supplies for moving around, transporting their goods around the continent because of, well, we all know it's the war in Ukraine lately, but the inflation factor, okay? And they're not benefiting from the lower oil prices or the lower natural gas prices as much, again, as U.S.-based customers and companies. Now, for one of the reasons that most people come to watch my videos, we've touched on a few other of the minor audiences, but the larger audience gets together here to look at, analyze, discuss, and pontificate about where the general stock market is going. And by the way, that's the smartest thing to do out there because of the word correlation, something we can talk about in detail some other time. But the S&P 500 hits a rally high back here in the middle of August after posting up from the middle of June, so a 2-month rally. Now it's been pulling back more or less, more rather than less, for the last couple of weeks. And then yesterday, due to oversold conditions on a short-term basis, reacts to those conditions and then puts in a little bit of a punch to the upside. But look at that right away. You see that lack of volume right there? Right there. Look at that. The day before goes down, volume jumps up. A couple of trading days, market goes down, volume jumps up. Now there's an opportunity to react positively or bullishly to oversold conditions, and then the buyers are there for a few hours and again, crickets. Okay? Crickets around. That's not a bullish sign, everybody. Certainly, the markets do have an opportunity using the S&P 500 to go up a little further from yesterday's close. I'd say at most 2 to 3%. That's a low probability, though. The higher probability outcome over the next 2 to 3 months is a retest of the June lows. And again, that can come in the form of a 3% zone on either side. So 3% higher, 3% lower, but more likely than not, the odds are very, very high now, sometime in the next 2 to 3 months, that a retest of the S&P 500 is coming. And by the way, this is the same message that I've been saying ever since those June lows were put in. How about that? Well, that's what you get when you're hanging out with ancient Roman trading secrets with General Romulus. Stuff that actually works. Speaking of stuff that works, the weakest area of the stock market for the past 12 months has been the communications sector. It was the first sector out of the 11 to top out. Remember, the S&P topped out on January 4th of this year. NASDAQ November 22nd, Russell 2000 November 8th. But the communications sector topped out right here on September 1st, so slightly over a year ago. And it has just been terrible, awful, gross, nasty, bearish behavior. And by the way, yesterday, or 2 days ago rather, just missed a new 52-week low by a hair on both a closing and intraday basis. However, this is creating an opportunity with the little bump yesterday for some actionable trading. That's right. Shorting, everybody. Shorting. So it's coming right back into previous support, which will serve as resistance. Could go up a little further again with the rest of the stock market. But look to see this setting a new 52-week low, more likely than not, before the end of this month. And lastly, I haven't had big long positions on, well, the long side. How about that? For quite some time. Matter of fact, after issuing an all-sell signal on everything stocks and bonds on January 13th, only 1.5% away from the all-time high in the S&P 500, I have been mostly bearish. However, I do have a small position. Again, disclosure, I own this stock. I have a small position in Rocket. Kind of cool, okay? Leading mortgage provider, beat up industry. The stock has been smashed, but you got to take a look at this. Since the end of March of this year, the CEO, and then a little bit later joined by a director, have been buying this stock by the bucket load. Okay, in March, CEO Farmer had 1.7 million shares. Now he has 4.2 million shares. And on Tuesday, he bought another 55,000. I mean, look at this. Look at this. These are open market purchases. These two gentlemen are getting out their checkbooks. These are not option-related, compensation-related trading behaviors. They're just buying the stock. Last time they bought it, $7.28 a couple of days ago. Last week, bought another 60,000 shares combined at $7.65. A few days before that, they paid $8.10. A few days before that, they paid $9. A few days before that, they paid $10. They just keep going and going and going. In addition, the stock is one of the more heavily shorted stocks in the market, not the most. However, it is heavily shorted. You can see that right here as we go and click around here just a bit. Rocket, RKT, pull it up, and we'll get into that as it pulls up. Come on, Yahoo, there we go. All right, so heavily shorted, yep, 28%, and the short position has been holding steady in the low 30 million. Stock should go higher, okay? Stock should go higher. All right, this has been Ancient Romans Trading Secrets with your old buddy Romulus. That's a general. I'll see you guys soon. That's all for now.